And just like that, here we are. What's going on, everybody? Christopher Inks with TexasWest Capital. I have Mr. Parrish and Mr. Holloway, both from Arch Public, sitting here as well. And, of course, it is the day before Thanksgiving, so hopefully everybody's doing great. God, oh, God, what do we got? Man, it's just so much kind of going on here, right? So we've got Saylor getting, everybody, it's that when the market gets very one-sided on a thought, usually that is kind of like the end of that movement, and everybody's very anti strategy, anti Saylor right now. Always gonna, the whole thing's gonna crash down and all that. And then we've got JP Morgan, Bitcoin bonds, something we've been talking about coming up here. But as Andrew mentioned here before the show when he's talking with me, everything we say here on the show is happening, but it's just happening like at 10 or 50x quicker than what we expect. Coming on there. And then, of course, we're going to talk about some Coinbase stuff because holy crap, Coinbase just keeps blowing up. It's trying to take over everything in the TradFi world, and it's pretty well positioned to do so. So buckle up, seatbelts on, right? And we can go ahead and jump on this. By the way, everything we're going to talk about today, Tillman is very bored with. So as you can see him sitting there, he's just like, yeah, whatever.
Listen, business goes on, Chris. We went through all this in the pre-shows. I mean, it's like, what do you expect from me, man? We need to hype this show up and we need to get it on this morning. It's Thanksgiving week. Everybody is probably already sick of being at home doing nothing. So let's provide some entertainment. But Bitcoin bonds, all that stuff, pretty boring. I'm not gonna lie. I'm kind of, it's just one more positive news headline that doesn't move the price. But yeah, I think that Jeff Park, I leave it to him to tell me, how big something is. And I do think the move from 25,000 to 1 million, and I think that's it's not a small move. It definitely is pointing towards institutional adoption and accumulation, which, I bet that's great news. That's awesome. Options trading on it, like all of the same things that we've been talking about, all the levers and mechanisms that Wall Street finds appealing when they're, hedging bets or placing them. We're here, and it is happening faster than I think anybody expected. I just think it's probably going to be utilized by 0.1% of the people that actually engage with the markets. It's just very down in the noise as far as I'm concerned. But
the upshot, though, is that JP Morgan is putting together a product that bets on the upside of Bitcoin.
Yeah,
right?
1.5.
So all the narratives by Jamie Dimon over the years of Bitcoin is or is not this, they've got to play on this particular playing field, or else they get left out. And so the scale of IBIT's growth, the scale of IBIT options, the scale of all that stuff allows for the ecosystem of Bitcoin to meaningfully grow. And to me, the headline here is not that a Bitcoin structured product is being created by the biggest, most prominent bank on the globe. It's that the bet that the biggest, most prominent bank on the globe is making is that Bitcoin's going higher over the next couple of years.
But even that is like, they're not going to bet on it going lower. That is a death wish. Anybody that's a serious trader, well, maybe that's a bad way to put it. I don't think shorts have the same appeal that longs do, and I think the biggest money stay away from shorts for the most part, because shorts have an unlimited downside and limited upside. That is a very bad recipe for trading, and longs don't. And I also think, it's just a sentiment of the market. Jamie's no idiot. He knows that a lot of people are big believers in Bitcoin, and that's going to pile in the cash. But again, like the fact that we're even talking about Jamie anymore, and the fact that we're even talking about JP Morgan in light of what Coinbase did this week and how excited I am about that. And I will spend the whole episode talking about it. That's how jacked up I am. But you know, they're going to kill they're going to kill JP Morgan Chase. Like JP Morgan Chase and Goldman Sachs, as far as I'm concerned, are now so far behind the 8 ball. I'd like to see how they're planning on catching up. It used to be like, I think we talked about 2 months ago, 3 months ago, we were kind of like, who are the superpowers in TradFi that are going to come in and try to, you know, through M&A get a really good position in the crypto space. Well, they better move quickly, because Brian Armstrong is aggressively taking their space away from them. So, let's talk about it. Monad, I don't know if anybody hadn't heard of Monad like me. I don't even know what they do, but I invested in it, and I did so because Coinbase and Brian Armstrong went on a week-long rant about how he's democratizing access to ICOs and IPOs, and he's going to allow the customers of Coinbase One early access, exclusive access, allocation, no different than what JP Morgan and Goldman have been doing for the last 50 years. They give allocation to IPOs to the folks that make them the most money and that have the strongest partnerships with them and that can do more for them, in other areas, so that they can reciprocate that value as much as they can. Now, Coinbase launched Monad's ICO, initial coin offering, this week. You got to say, hey, I want X number of dollars to be allocated. And then they gave you some portion of that in allocation based upon how popular the launch was and how much demand there was. I ended up getting 58% of the allocation that I requested, which is a pretty healthy chunk, not bad. But it also tells you that there was a lot of demand. Like there was an excess supply at the end of the launch. So all that, I'm sitting there going, man, this feels real. This feels exciting. This feels like something that could change the way markets work. And here we are 3 days later, up almost 100%. And they have very clear liquidation rules in the sense that it's not like a tie-up agreement or a lockup agreement like in the TradFi space where you can't sell Monad that you got allocated. But if you do, you're going to get less allocation of the next coin they launch. So it's a reward-based system that says, hey, you stay with us and we'll give you better and better access to these new coins that we're going to be bringing to market. And I just think this is the biggest thing I've seen in this cycle so far. To me, I may be wrong, I may be overstating things, but to me, you want to poke the biggest brokerages in the eye. This is how you do it, in my opinion. So I will shut up now. Andrew, Chris, have at it.
I think that it's all of these stories are related. So let's bring in also the infighting, let's call it, between JP Morgan and MicroStrategy, right? Mm-hmm. So JP Morgan talking about MicroStrategy in a very, very negative way, putting out a report or two about concerns about MicroStrategy's, long-term viability, yada, yada, yada. Oh, and then a couple days later, they announce a structured product that they're going to be offering to their customers.
Timing,
isn't that quite interesting, right? So it's all it's competition, right? So JP Morgan has decided we've got to connect ourselves to Coinbase because they have 2x the customers that we have. Their growth isn't going to really meaningfully slow down. And we've got to find a way for our customers not to end up with more assets at Coinbase over time, or a subsection generationally of customers to no longer work with us because they're just more comfortable at Coinbase. We've got to find a way to mitigate that particular risk. And also, we're going to fight on the playing field versus strategy that's doing a bunch of structured products already. Sailors everywhere all the time talking about it. And so if there's going to be structured products associated with Bitcoin, we want to be in that game because there's lots of money to be made. So we've got to fight this off as well. So JP Morgan's, they're fighting a fight on several grounds, and
losing.
Yeah, that's correct. So, it is the overall thought process is that there's going to be more structured products associated with Bitcoin. It's just the first one with JP Morgan. My best guess is 6 to 12 months, they will have offered 7 or 8 of these.
Again, I totally agree. 100%, Andrew.
And then, of course, Morgan Stanley will do the same. Goldman Sachs will end up doing something like this, and on and on and on. So it's just in the same way that we're seeing just a huge wave. Like every day there's a new announcement of a new crypto ETF being launched, literally every day right now. So by the end of Q1 of next year, we'll have the better part of 100 different crypto ETFs that will be out there. In the same way, structured products will follow the associated volumes with Bitcoin, Ethereum, and so at some point there will be Ethereum focused structured products. These all have to be offered, or else everybody will just get them at Coinbase or Strategy or another exchange that offers them, like Kraken. What did Kraken do just yesterday? So Gemini has been offering a credit card, which you got to qualify for a credit card and earn some version of Bitcoin or whatever you want to earn when you make purchases. Well, Kraken said, that's a neat idea, but why do we want to limit ourselves to just people that have to qualify for a credit card? There's maybe about, 250,000 of those people in the United States and a bunch of other places. So why don't we just offer a debit card that also gives you rewards back in crypto, and everybody can have it, right?
Or why not? It's basic, but it's not even just like about the capture of the customer. There's a very big difference between a credit card and a debit card for the issuer.
Yeah.
A massive difference. You issue a debit card that only gets issued by one type of institution, certificate of deposit, a bank, like somebody who is holding your cash. And if there's fraud, for example, on a debit card, the ultimate settlement of that fraud falls liability on the issuer, on the bank itself. And they do not like to do that. That is a big hassle, that it's incurring a lot of liability where they don't have to. I don't think that this, again, is indicative of anything other than them replacing the banks. I think these crypto exchanges have a very clear path forward for them. Everything's going to be tokenized. So therefore, we can be the central market for everything. And, if you're a bank and you can hold people's money and you can issue initial coin offerings or IPOs, and you can lend people money, you can let them lend money through your platform. Like, all of those things exist right now on Coinbase. If you have money in Coinbase, you can participate in pre-allocation IPOs. You can lend your money out at a 6.7% plus rate. You can have a certificate of deposit of your USDC, and you're earning 4.25% on your money. All of these things, you can have a credit card that you pay with your balance that's on Coinbase. That's just full integrated financial services, like top to bottom, full suite. So then when you add the S&P 500 being tokenized, what can't you do on Coinbase is, I guess, the question. And so to me, it's just clear they're taking over the entire market, because tokenization, instant settlement, liquidity, depth of liquidity, all those things are better than on the TradFi side of things. And, even if you look at the CME and what they've tried to do in terms of participating in Bitcoin, I don't know the headline offhand, but you can look it up. They had record-breaking volume on Bitcoin futures this last week. It's even the hottest product on the CME. And in my opinion, the CME is not that great. But it's like what Andrew said earlier is 100% right. You either play ball with this community and with these products, or you get left behind. And, you know, it's happening at an alarming rate, very
Yeah,
alarming.
the pace and speed of it is really something to behold. But that's the point. If you have organizations like Coinbase, and again, Coinbase, Kraken has almost as many customers as JP Morgan has, by the way. So if you're a decision maker at Coinbase and you're looking around, you're going to lose your job if you don't realize that Kraken, Coinbase, Binance, and whatever are all materially larger than you. So you better be making moves in ways that keep up with you know, the new Joneses, right? Because these are the new Joneses. To me, the interesting thing about Coinbase and Monad is it is materially different than, you know, let's call it token offerings from 17, 18, and even the ones that you could create by yourself in your basement from, you know, 18 to 24 months ago. The price hasn't materially dropped, right? So even IPOs in their first 48 to 72 hours, most of the time they go back down,
Yeah.
right?
Well, I mean, you see a ton of volatility.
Yeah, usually they go down. I mean, look at Gemini's stock, you know, 72 hours after it was issued, it was basically cut in half. And that's with the full weight of Wall Street behind that particular offering. Morgan Stanley, JP Morgan, and Goldman Sachs were the chief underwriters. NASDAQ actually took a position, a $50 million position in Gemini itself. It doesn't get more institutionally rubber stamped than that. And yet what happened with Monad and Coinbase, and is happening right now, is a better outcome materially than that. So it's a big deal. I put out a post late yesterday that didn't get much attention whatsoever about the fact that the Coinbase and Monad process, outcome, all of those
But
things
it
such a big deal, and it's not getting the attention that it deserves.
wait, not only is it not getting the attention on that front, let's talk about another front Coinbase is offering, which we've talked about this for years as being like the holy grail of our, you know, ecosystem in terms of liquidity, which is loans against your Bitcoin and your Ethereum. How many times have we talked about, like, man, when you can borrow against your stack without selling it from a legitimate trusted bank, that's when the key will unlock the door. Well, no one's talking about it. You can do that right now on Coinbase.
Yeah.
On Coinbase, you can borrow up to 70%, you know, in some cases, 50% in other cases, of your crypto stack in USDC. Okay. So I want you to think about this. You're borrowing, and right now for the variable rate of borrowing is 5.63% on Coinbase. You're earning 4.25% in USDC on, like, they're doing finally what the banks should have done a long time ago, which is not keep all of the delta for themselves. They're actually letting you put your money to work, because you could go borrow. If you have a very good way to earn more than 6%, well, then you can play the arbitrage game and you can keep your stack. So think about it like this. Let's say you have 100 grand in Bitcoin. You need 50 grand out. You can borrow the 50 grand from your Bitcoin. Well, if Bitcoin goes to 200 grand, you know, you've paid your loan back with free money, right? So you have this accelerator in upside potential in the fact that you're now still holding Bitcoin while you've taken the loan down. Well, now you've got 50 grand. Well, what if you go take that 50 grand and forget about doubling down on Bitcoin? What if you just go put it in your business and you're able to earn 10% on that 50 grand? You're accelerating the debt payback on the cash that you're able to pull out of that loan as well. You could flat leave that 50 grand in USDC and only be paying a net adjusted rate of like 1 point something% on the spread. And that's a lot better than, if you had to have 50 grand as an emergency fund, would you rather pay 1% net, or would you rather pay 7%, 8%, 9% on any of the other loans that you can get the 50K from? So they're really giving the people advantage in terms of real compounding. And it's not that like they're a competing bank on the next corner going, hey, your money market account will now yield 0.7% APR instead of 0.5%. These are meaningful whole digit moves up in interest being paid out, interest being paid in, and on the platform itself. You can make arbitrage money as a bank, a bank yourself, by just doing one thing. You can lend your money out, your USDC, through Coinbase at a 7+% or 7% yield, and you can borrow against your Bitcoin and your Ethereum at a 5 to 7%. You can literally borrow money and make money at the same time on Coinbase, and that's without the upside potential of the price movement of Bitcoin itself. Now, I'm not sitting here trying to promote Bitcoin. Promote Coinbase. I have hated Coinbase for a long time. But in terms of breaking down the barriers that we've been talking about for the last 2 years, it's not theoretical anymore. It's done. It's here. You can go do it right now. You can actually use these things with the click of a button through their app on their phone. I mean, it's crazy.
So you're saying go all in, buy Coinbase stock right now, everything you got, sell your grandmother.
I'm not saying that because I don't know what the where it's trading as a multiplier, but I will say that I've never been more impressed with a company pushing the boundaries of what can be pushed. And I honestly didn't know most of this technology was ready for retail. If you had asked me 2 months ago about the borrow and the lend and the ICO stuff, I would have said, yeah, a year and a half from now, that is in the works. But I mean, it's done, and you can actually use it, and you're seeing the benefits of this system in the stability of this ICO launch. To Andrew's point earlier, like, we haven't seen a 2x stable launch of an IPO or an ICO in a long, long time. It's been very, very nasty to be in, and very risky to be in at the IPO price or the ICO price. And I will tell you this, the coup de grace moment for me, the moment that you will see me absolutely go berserk in excitement, is when Coinbase takes a company through an ICO launch that's not crypto related.
Yeah.
When that happens, the whole game is changed. We've shifted from one financial system to the next, in my opinion, because that's where the original wealth, and that's where all the real money, the generational wealth, is created in IPOs. That is how.
Well, guess what Monad doesn't have to do over the next year. They don't have to create quarterly reports every 3 months because they're required to by the SEC. They don't have to do that. They just have to do something associated with their brand and whatever it is that they're tasked to do, and whatever they're trying to get accomplished associated with their quote unquote token. They just have to keep moving forward. So there's not an additional overbearing regulatory bear on their back. So you take out the overbearing regulatory portions of it. You take out the exchange portion of it. You take out, all the, the enormous amount of legal fees associated with it. You just, and on and on and on and on, and you do what they did, and you have a really meaningful outcome. So it'll be interesting. It will take time because, as you can imagine, nobody in the world of TradFi is on podcasts talking about this. So it'll take time. But here's the thing, like, I remember maybe about 3 years ago, I've talked about this podcast before, Compound and Friends. with Josh Brown. Really, really smart guys. Have been in traditional finance for a long, long time. And they do it the right way, right? They used to work for big wirehouses. They started their own RIA back in 2012 or something, and they built it to a $4 billion RIA. That's meaningful customer funds that you're dealing with, right? And I remember 3 years ago, basically him just off the cuff saying, I wouldn't touch Coinbase with a 10-foot pole. Like, what do they do that's any different than anything else? And couldn't have been more wrong. Literally couldn't have been more wrong. So just because, traditional finance isn't talking about some of this stuff, it doesn't mean that it's going to hit him in the face with a 2x4 at some point, because that is what is coming and what's going to happen. You can't look at the current actions at places, again, like JP Morgan, what BlackRock is doing, the constant conversation about tokenizing different versions of assets. It's constantly being talked about. So what does that mean? What is the blueprint for that stuff? In other words, what's the why behind that? Well, the why is there's money to be made there somehow.
Yeah.
And so the change and shift associated with a meaningful adjustment to how financial markets work, there has to be additional money that's going to be made for a period of time, right? All fees kind of head towards zero anyways. 20 years ago to send a wire transfer, it wasn't $25. It was more than that, right? So now it's got down to $25. I think I remember when it was $75. We'll get there. It takes time, but what's interesting is we've got a front row seat to innovation, right? Because
here's some interesting things to take home about the Monad launch. Their goal was to raise $187.5 million at a $2.5 billion fully diluted valuation. They offered $7.5 billion of the total $100 billion supply in this launch. It was oversubscribed. It raised $269 million. So it raised almost $100 million more than the goal, and a good 30% more. 85,820 participants across 70 countries, achieving a 1.43x oversubscription rate. Name me an IPO that's ever been issued and the IPO got 85,000 plus retail investors in at the ground floor at a minimum investment amount of $100 across 70 plus countries. You talk about the democratization of access, and this is the holy freaking grail. This is the,
It intentionally doesn't happen that way at trad circles, right? Because they want to quote unquote reward their best customers.
Yep.
And so they don't allow the democratization because there's a purpose behind it. Spend more money with us, bring in more assets, close your account at Morgan Stanley and bring it to Goldman Sachs, or close your account at Jefferies and bring all 2/3 of your money to Goldman or to Morgan Stanley, whatever it happens to be, and you'll get more allocation of the Facebook IPO or the whatever it happens to be. You'll get more of this. Whereas with Coinbase, it's just, well, here this is. It's open to everybody, and we want to make it a great experience. That is a meaningful shift, and it's just a question of now how thoughtful is Coinbase about doing this going forward? Because as you can imagine, they're probably getting a lot of phone calls from a lot of organizations that want to do what Monad just did, right? They want to do the same thing, because in the crypto space, mania is just another word for Tuesday. So there's going to be every project on the planet is going to want to do something like this. Because if you can take your business and turn it into a 2.5 billion valuation by offering a small subsection of your company to Coinbase's $125 million customers, you'll do that every day of the week and twice on Sunday. So it's a question of how Coinbase moves forward with what they just pulled off.
Well, and how quickly people who have nothing to do with crypto take notice. Again, that's what I'm looking for, is like, when does this become the preferred path to liquidity? Forget whether you're crypto centric or not, because we said this on Melker's show yesterday, and it's true. Like, the more I think about this, even if I made matches or tiddlywinks, whatever it is, and I needed to raise capital, an ICO may be the best path for me to raise capital in the future. And I think this is kind of the first step towards that. We're going to find out real quickly whether there's a hitch in the get along, but you can't argue with it being up over 100%, 4 days in. You can't argue with the stability of the growth curve. You can't argue with the fair and equitable distribution of it. You can't argue with the way that, like we didn't mention today, I didn't get 100% allocated. I got 57 or 58%, I think, of what I asked for. Well, that doesn't happen when you have sniping bots on meme coins.
Right.
Think about that. Like, these other markets that we've seen billions of dollars flow in and out of in hype, and then they crash, right? Like Pump Fun and all these other markets that have attracted everyone from an upside perspective. Well, this is the legitimate version of that. This is like the Coinbase version of that. And that could be the bridge that gets TradFi and crypto on the same page as it pertains to public offerings.
It's just going to be the next 3 to 7 years in this space. It's just going to be way more fun than it was the last 3 to 7 years, and that's saying a lot. Why? Because there didn't just used to be Morgan Stanley and Merrill Lynch and UBS and a few others. There used to be Solomon Brothers. There used to be Smith Barney. There used to be a couple of them, Bear Stearns. There used to be all sorts of wealth management / investment banking types of entities, and it's just consolidation that happened. So at some point, does it make sense for Coinbase to go from 1.25 million, 125 million customers to 210 million customers because they purchase a competitor, right? That will happen at some point.
Yeah.
That will happen. So what does that look like? Is it easier to do when both of those entities are publicly traded entities? Because early next year, Kraken's going to be a publicly traded entity.
But what does that even mean anymore? Do you see what I'm saying? Like, I think this is the thing that blurs the lines of what does it mean to be a publicly traded company? Does that mean that there's representation of ownership in coins? Is that a publicly traded company, or is a publicly traded company still defined in the old way that we all think it is? I asked ChatGPT on here, please give me your cliff notes as to why Moned launch was successful. Very interesting response. Moned's launch blended hype with delivery. Coinbase's fair platform democratized access. The airdrop built community, and the mainnet proved the tech with no outages was a real deal. Backed by ex-Jump trading founders, it netted $431 million of total funding while giving retail a rare edge in this space. As the first U.S. compliant ICO in years, it signals a maturing of these markets, and early signs points to sustained growth. So, I mean, just think about even ChatGPT 5 days after the launch has accumulated enough knowledge about what happened there to call it the first regulated ICO. I mean, that's pretty good to me.
Again, we leave things out that are happening and that will be here in the next 6 to 12 months, right? So Again, why is BlackRock and Citadel going as fast as they can in Texas to create an additional exchange that competes and will be, as we believe it to be, 24/7 trading? Well, it's to compete with what we're talking about here. Tokenized assets. Forget about the whole real world garbage that they connect to it. I don't know even what that means. That feels like an outdated term already. But tokenized anything means that you could do what Coinbase just did. And so the Citadels and the BlackRocks and whoever else is connected to that project, they're trying to outpace or at least keep up with what Coinbase just did, because Coinbase can do it again and again and again. And they're having the same conversation that we're having right now. At what point, if there are no other options, does the next John Deere go to Coinbase and say, well, you have a pretty tightened up process that seems to be compliant, but it skips all this other stuff that's really, really heavy on our shoulders to deal with. Let's just do this. When that happens, the BlackRock Citadel thing, now they're even further behind.
Well, and you could do really crazy stuff. Like, let me tell you an idea that this brings up in my mind is like, what if David Bailey said, you know what, we're going to issue an ICO that represents every whole Bitcoin that Nakamoto owns. So now you have a Bitcoin equivalent coin, but only as its issuance is basically driven off of a regulated public company and how much Bitcoin they have on their balance sheet. There's just so many ways to play this game and to use this as an additional fun house to make money and to hedge bets and to play across multiple markets. When you get to play correlated assets across multiple markets, the arbitrage opportunities alone bring the players to the field. Like, build it and they will come. You got two markets that trade the same asset. There is disjointed price action between those two markets. If you know how to harvest that, it is like shooting fish in the proverbial barrel. And those types of things, when you have tokenized assets that represent, quote, real world assets in the form of stock certificates or bonds or whatever, it just creates so much fun for the traders to kind of go in there and create new paradigms and new. It's no different than what I just said as it pertains to Coinbase. And like, I can lend my Bitcoin out, make this money on it. I can borrow against my Bitcoin here and make an arbitrage spread. That's a simple retail banking way to do it. But if you're taking trades in this market while shorting this market, there's also opportunity in trading, to do this exact same thing. And professional traders love those types of setups. Like, that's where the money's made.
Yeah. And, we see all this, right? And so if you're anywhere on social media, oh my God, Bitcoin top is in. Oh my God, we're crashing to nothing. Oh my God. You got Peter Schiff claiming it's the end of Bitcoin for the 15 billionth time, and others joining in. And I think if you're newer to market,
$2,000 since we've been on this podcast.
Yeah, love that, right? We got to come on more often, right? That's what it is. But here's the thing, if you're retail and you're just kind of coming in to markets, you're not really experienced in markets, it's easy to get caught up in all the nonsense. And, we're sitting here talking about some really significant things that are happening, again, with Coinbase, kind of really just trying to take over TradFi itself. We've got MicroStrategy out there, Strategy, who, by the way, over the last week, in spite of the MSCI index stuff, in spite of, their break-even point at 74,000 or whatever coming up, all this stuff and all this hate on them, their structured products are up 50.8% in the last week alone. So STRD, STRF, STRK, and STRC together are up 50.8% in spite of all that nonsense. And then on top of all that, something we haven't even discussed yet with, and I know that Andrew wanted to bring up, was BlackRock's IBIT, the options activity on it. absolutely insane going on there, right? So I mean,
before I comment on that specific, those preferreds and the price movement, I would like to mention that I could never be a CEO of a company like that, because I would be so tempted to create the next preferred, and it would be just STNK, and it would be right. So stretch, strife, all sorts of stuff. So just stink.
but then you'd have to do it one better the next time, and you'd have to keep coming up with something. Yeah.
Also, Tillman and I, we had these little bets going, and if anybody lost the bet, then you got to choose the next guy's personalized license plate. And in the moment, he didn't realize how good my decision was for him. But then a couple days later, he realized he couldn't stop laughing about it, because he told his boys and they couldn't stop laughing. So my license plate from him was just going to be fart. It's just going to be FART. And so MicroStrategy makes me think of these things. And so, up 50% or not.
Andrew's license plate, by the way, is going to be ILUVFLR. So that's
A little flair.
And the front license plate is going to say gross. Listen, Saylor's, he's a smart guy, right? So whether he, particularly understands the moves that will or won't happen, the spot price of Bitcoin, the fact that over the last months, he's almost exclusively been talking about his structured products is meaningful. And it's worked, and it's been helpful. There's a decent portion of our space that wants to see him somehow lose and get blown up.
Which is so stupid, by the way. I mean,
which is stupid, but also, all of those people aren't, they can't hold a candle to the both experience / intelligence that kind of Saylor brings to the table associated with the financial engineering that he's doing. So it's kudos to him that he continues to kind of beat back the naysayers, and just keeps this thing moving forward. That's another. It's another name. It's another big player on the chessboard. That where will they be in 3 years is the question.
I saw there's a microcosm of the conflict that we see in the Bitcoin market and the crypto market. And I grew up in that conflict, and it's Dallas and Houston. They both make their money on the oil industry, but Houston produces it and Dallas spends it. You have working interests in Houston and you have royalty interests in Dallas. And they think very differently, even though they're slave to the same master. We're all slave to Bitcoin. Bitcoin's the master, but you can focus on it from very different vantage points, and it doesn't discount your vantage point. I don't focus on what Michael Saylor focuses on, but I am not foolish enough to call him an idiot, and I'm not foolish enough to not think that the response that he's seen in the market and the dollars that he's been able to raise isn't indicative of him not knowing his sector exceptionally well and delivering a product that they want to buy exceptionally well. But he's done it, and I don't know that market, but that doesn't mean that it doesn't exist, and doesn't mean it's not a very important part of the Bitcoin space. Doesn't mean that we shouldn't support it. All of those things. I'm more focused on Bitcoin, on the Bitcoin network itself, on the coins. It attracts me and excites me a lot more to see development on Coinbase taking ICOs forward versus pieces of paper and engineered finance taking derivative products and these engineered products forward. This doesn't excite me that much, but it doesn't mean that it's not equally, if not more valuable, right? Yeah. Which one's going to be a better blue pill for people to take to get into crypto? You think more of the old timers and the big money players are going to be apt to see it my way and go, you know, man, ICOs, where this is the future? Or do you think they're going to see the major money flowing into the structured products and go, there's something here? Obviously, it's going to be much easier path
Yeah,
for
well,
them to get onboarded by
yeah,
Sailor.
that answer has already been answered because of the amount.
It's already been answered. Exactly.
Gone into IBIT, right? So, know, if you take away the move down from 120 to 89, where we're at, well, about to be 90, IBIT's $100 billion product. That's how much money's been put into that product. So, by the way, there's been a lot of folks that have come out and said, and these are even Bitcoiners, like, hey, I let go of my Bitcoin stack and I put it into IBIT. Why? Because you can do a million things with IBIT right now that you can't do with your spot Bitcoin on a cold wallet.
You can now at Coinbase, though.
Well, you can at Coinbase, and but it's the same, kind of trade-off that you're making. You're putting it on exchange, and then you're doing all sorts of stuff with it. Same thing with IBIT.
You're right. Yeah.
By the way, again, you can take your cold storage Bitcoin, you can send it to the folks managing the processes with IBIT and turn it into IBIT shares. You literally do that. Yeah. So, it's while we, there's a large section of crypto that is uninterested, other than the headline that JP Morgan's doing something with Bitcoin. The nerdy information inside of there associated with a structured product, it's just very, very important. It is truly the thing that we've wanted for, let's call it 7 years. It is adoption, pure and simple. It is adoption. It is creating products so people have access to an asset class that is now part of the fabric of the financial world.
Well, it's another bucket of liquidity, right? Each one of these products, each one of these, everything is just like a vessel for holding money and liquidity. And the more collective liquidity that our market has, the more mature it is, the harder it is to be manipulated. All of those things are beneficial to us. The more de-risked it gets, so you can put more and more money in there. And that's why the allocation percentage, I think, will gravitate upwards for a very long time. One would beg the question 50 years from now, if Bitcoin and everything goes at the trajectory that it has gone, and we see a $13 million Bitcoin like Michael Saylor predicts, what do you think the allocation percentage recommendation would be at that point? Well, it's sure as heck isn't going to be 5%. It sure as heck isn't going to be 15%. It'll be damn near close to 50%, if not more. It may be the flip of the switch, the old like allocation percentages of the past, 60-40. Well, maybe Bitcoin's the 60. You know what I mean? Like we just don't know. But that's, I think, where we're headed until failure or until something materially changes.
Well, people are probably, there's going to be a cross section of high net worth and ultra high net worth clients that are already moving probably significantly beyond the 1% to 2% allocation to quote unquote Bitcoin in their portfolio. Why? Because they've got a 1% or 2% allocation in ETFs. Then they own a little bit of MicroStrategy, and then now maybe they own one of the structured products that MicroStrategy offers. That in and of itself is going to be pushing you to that 3 to 5% range type of number. You may not be completely aware of it, but that is kind of where you're at. And again, so when you create a significant amount of structured product type stuff, 2 years from now, you could end up having 15% of your portfolio dedicated to Bitcoin and crypto assets, and you may not hold a single spot version of any of those.
Bingo. Andrew, that is so, you repeat that, because think about our structured product. We created a fund. The fund is a real estate fund. The fund's sole intention is to become a very strong Bitcoin accumulation company. And it's basically high growth franchises, high cash flowing businesses that we think have a strong purchasing ratio to the current price of Bitcoin. So you're like, look at like a retail business that sells sodas, for example, as little oil wells. And every dollar that hits the register is a revenue source, right? And if you're able to peel in profits 50% of net operating income off of that dollar, and that represents 12% of that dollar, and you've got 12 cents of every dollar of every soda from a major fast food chain going into the purchase of Bitcoin. The expansion capital needed to take that franchise from 100 locations to 2,000 locations. And that growth potential now is measured against what it could do in accumulating Bitcoin during that time period. That's a structured product. That's what we're doing in our fund. If you're an accredited investor, we'd love to tell you more about it. But that's just one example of you know, in the future, you having exposure to Bitcoin, but not only current Bitcoin, but future Bitcoin. Like, this market is not only looking at what you hold, but how you're going to buy it in the future. And I think that's why publicly traded companies are raising money and trading at a multiplier of net asset value at a positive MNAV above 1. Why? Because they have the potential to raise money to buy future Bitcoin. There's a future value in the vehicle's potential to buy more. That is going to get represented across the board in a lot of different ways, and we're doing it. And so, you know, it wouldn't surprise me if there's thousands of other people doing it in their own unique way based upon how they see the markets maturing.
Yeah, and you know, if you get kind of blown away at the things that are happening already, I mean, just wait till you see 5 years down the road. What kind of product offerings are there going to be at that point? There's going to be things that we're not even thinking about at the moment here that are going to come out and just be like, wow, right? And I think that's a big, you know, plus to, you know, what Bitcoin actually is, you know, and given this ability to be able to do this. And so again, you know, I go back to everybody, you know, on social media, retail is so, oh my God, it's the end of Bitcoin. Oh my God, there's the end of this all stuff. And you know, you can't see the forest for the trees in front of your face, right? You're so blinded by the nonsense that's going on in you know, social media right now in terms of what they're saying about Bitcoin that you're not even like be able to see beyond that and see, oh my God, even if they were right about what's going on at the moment here, it's a very short-lived thing. What's happening 3 years, 5 years, 10 years out?
Well, you're using price as your confirmation bias.
Yeah.
And that you should never use price as your confirmation bias.
Right. Yeah.
If you're using price, you're a technical trader. So stick with technical trading. You can't cross those. You can't go, well, price is now a fundamental. No, it's not a fundamental. You're either a fundamental investor and you're betting long term because you see macro trends evolving to grow market share, or you're a technical trader and you don't care anything about that and you're looking at price action and only price action. But when you start marrying those two, you're just picking and choosing what you want to see.
Especially for your emotional stability.
You're using one as a confirmation bias to negate the other. That's correct.
Well, before we get out of here, I just want to also bring up, man, you guys saw Texas, right? Texas bought 10 million.
$10 million worth. Woo!
Well, but everybody's upset because it wasn't actual spot Bitcoin, right?
I don't even care. I just think the amount's pathetic. Give me something. I mean, that's not even. You know, that's $10 million. I think Texas spent that much on tumbleweed cleanup last year in Lubbock.
Tumbleweeds? What are you talking about? We let them just.
Yeah, we do. Yeah, we're doing something with them.
Again, the institutions are going to they're not going to hold spot Bitcoin.
Yeah.
They're afraid to. And so that's why, you know, IBIT is going to, where is it in 3 years? Heaven only knows. I mean, heaven only knows. It's their most successful product ever, and they're not going to back off pushing the heck out of that thing.
Yeah.
Just, you know, in any business, really in anything in life, but certainly in any business, you lean into your strengths. You don't spend enormous amounts of time searching for the next thing that's unproven. You just
serve your customers well.
Yeah, you just keep hammering away at the proven stuff that you do.
Yep.
And BlackRock's going to do that like crazy. Again, what did they do? They went down the road of this ESG thing, and it was a disaster, an absolute disaster. I'm telling you, they only have to learn that lesson one time.
Yeah.
So yeah, it's, you know, the strides that are being made with Bitcoin and crypto overall is continues to be significant. JP Morgan structured product, Coinbase doing everything that you could ever do in the world of IPOs. JP Morgan trying to act like MicroStrategy, and all of it being somehow all part of the same song, just a different verse. Really, really something to behold. It really is.
Yeah, I think
going to be interesting to see how Vlad responds to all this. Oh, Robinhood's been a little quiet from
Yeah, they've been a little quiet for maybe only about 2 weeks.
That's what I mean. But they're the ones that are keeping pace with everything. I'm sure there's a big announcement coming out here soon. I wouldn't doubt it.
Yeah. Well, I think anybody's listening in here, just keep watching. Just keep watching the space. I think again, most of what you're going to see on crypto Twitter and social media is very short-sighted stuff based on charts and whatnot. And I'm a technical trader, and I love that stuff as it is. But, again, when it comes to Bitcoin, I think there's just so much still coming. And again, just the things we've talked about just in the time that we've been doing this show over the last year and a half plus has just been, is coming so much quicker than we really ever expected it. And there are going to be so many new things coming out that we aren't even thinking of at the moment. And I think we do a pretty good job of figuring out, what's coming. And I just think you're going to be surprised. I think, you're watching this going forward here. You're going to really be surprised at what's coming out with Bitcoin and even just crypto assets in general, and how TradFi kind of, or I guess how the native crypto companies are bringing it into TradFi, I guess was probably
and DeFi. Don't forget DeFi, man. DeFi is crazy.
DeFi forever and a day.
Well, I mean, listen, Coinbase and what they're doing literally can be done on DeFi today. It's not like those things are the same bridges, same infrastructure, same everything. The only difference is one is a protocol that's not on a central server, and one is a protocol on a central server. That's the only distinction. And so what you're going to see is the same type of offerings, the same type of lending, borrowing, collateralization, all that stuff is going to come through DeFi, but be integrated through the central exchanges. So what does that look like? Well, it looks like I can just click a button that says lend my money on Coinbase, Kraken, these exchanges, but it's actually putting my money into a decentralized protocol that Coinbase isn't having to manage to earn that yield. And you're not having to learn DeFi to figure out how to participate. That integration is happening right now, guys. I know several projects that are very small that names will not be named because Andrew will get mad at me. But I know the conversations that are being had with exchanges, and they're doing that right now. They're literally going to say, if you have XYZ token, you can participate in DeFi by clicking this button. And then you're not having to go out on the DeFi exchanges. You're not having to manage wallets. You're just doing it all through your central exchange, and yet it's DeFi dependent. That integration is very big, because the protocols and the efficiency, think about it like this. There's no cost to manage. If Coinbase has administrative costs that are eating into my profits, they have to. It has to come from somewhere, right? They're getting paid for those services. A decentralized protocol has no employees. It's just a bunch of network of computers that knows what to do with specific signals that they receive. That is going to, by definition, be more competitive in rates than the central exchanges. So even if the central exchanges integrate, if you want the education and you want the headache and the complexity, you could do the exact same thing that they're doing for you and make a little bit extra. And all of these markets and the deltas that can be achieved by doing things differently than other people it leads to growth. Money will come, I promise. Large amounts of money.
There you go. There you go. Oh man, I guess that'll do it for us, guys. It's been an hour here. Lots of great stuff to talk about. And again, if you're in Bitcoin because you say you're in Bitcoin, stop looking at the price. Stop worrying about the price. Pay attention to things we're talking about here. Have your future view in there. Look through the forest. Don't get caught at that one tree in front of you, right? But if you are, if you're in it for the price, then trade your price. That's okay. But again, you don't. Last thing you want to do is confuse yourself. Someone was saying there, you don't want to sit there and say, oh yeah, I'm all about the price, and then it goes in there, you're like, okay, well now I'm all about the big picture because it makes you feel better, with your emotions and everything. So, man, oh man, but yeah, hey guys, listen, Thanksgiving tomorrow. I hope you guys have a great day, a great time with family and whatnot. There won't be a Friday show. Anybody that's watching here, they usually watch me on my Friday show. We won't have a Friday show because I'm going to be off through the weekend into next Monday. So we'll have the market breakdown again next Friday then. But y'all will be back next Wednesday, right? You'll be back ready? Awesome. Other than that, I don't know if y'all got anything else going right now. I know we've got, if they go to members.texaswestcapital.com, use the code BF1, Black Friday 1, basically, BF1. You get 45% off an annual subscription to our Liquidity Cartography group in there, guys. That's the one I locked in there.
What's the code? Did you say the code was BFE?
BF1.
Oh, my bad.
The number 1. But yeah, get in there. You can trade live with me. We did $5,400 over the last 2 days. The previous 2 days or whatever. Learn, but again, it's just if you're about trading charts, guys, the best thing you can do is understand how liquidity flows, and that's what we teach in there. So
I looked it up, just so everybody knows, whoever's watching this show, we were talking about the rise of Bitcoin options, the opportunity for Bitcoin bonds and structured products in January of this year, and it's all now happening in that time frame. The options scale has been approved from your ability to buy 25,000 options at a time to 250 to now the number just got pushed to 1 million. 1 million,
which means perps are coming to the States.
So the ability to create structured products and to, again, just enormous leverage associated with the space. 1 million options is a nuts number. That is, that's where institutions play, and that's how institutions are able to create structured products. I mean, the totality, 99% of structured products are essentially options by any other name. And so you're creating a yield of some sort attached to an option that, not defaults, but essentially comes to bear at some point in the future. And so that's where all that stuff is built. So it's all happened. My post was like, in 2 years, options, blah, blah, blah. Well, it's happened basically in 10 months.
9 months.
Something.
Yeah.
It's really something.
Hold
I
on,
will toot Chris's horn, and people don't know this, but Scott Milker told it to me out of his own mouth, so I feel confident and good repeating it. But Chris taught Scott everything he knows about charts and everything he knows about stocks. And so if you're interested in understanding the markets, I don't think there's a cheaper, more effective way than joining Chris in learning that stuff. And if you listen to our conversations and you're kind of like, well, what do they mean by that? Or what is that terminology? I've never heard that before and stuff. Sign up. I promise you won't be disappointed. But Chris Chris is a pro, and he drives a lot of knowledge from a technical perspective into Twitter, and we have all been a significant beneficiary of it. So yeah, kudos to you, Chris.
I appreciate that, man. Thanksgiving got you, huh?
Yeah, well, listen, we don't spend enough time talking about it, and I always love listening to your recommendations and your charting and all that stuff. But when Scott told me that, I just don't. I think that goes. You're deserving of recognition, is I guess the point, because Scott is a huge force in our industry, and he knows a lot about trading. For somebody who that wasn't his professional career, and so I asked him one day, I was like, how do you know so much about trading? He's like, Chris taught me everything I know. That's how I got started in the industry. So you fed a giant that is now feeding all of us. So it's good.
Absolutely love seeing how well he's done, man. It's just been absolutely crazy. So,
well, isn't he part of the super VIPs at TexasWest Capital?
I have no clue.
Your house and get to do some things, the super VIP group.
He's actually the guy who, Chris has him paying penance and mowing his yard for him.
Yeah,
that's when he complains about
that.
Oh, Lord. All right. Listen, we're going to get out of here now. I hope everybody has a wonderful Thanksgiving. And if you don't happen to celebrate Thanksgiving, I mean, you can. I'm gonna smoke a brisket. So that's how we do it here. Forget the turkey.
What's your finishing temperature? And I'm going to judge you harshly off this answer.
Well, it's 500, of course.
No, when do you pull the brisket, Chris? When do you...
Actually, I'm doing something different this year. I've got a indoor smoker that we're gonna do with this.
This couldn't have gone worse from an answer.
No, man. I'm telling you,
this could not have gone worse. You still have to know what the internal temperature is when the fat is rendered. When are you pulling the brisket from a temperature perspective?
Say that again. I'm sorry, you broke up. What?
201. That's the answer. Okay.
You're looking at 201.
No one think you pull the brisket at 201. Okay, that is when the fat is at its perfect caramelized state. So, put an internal thermometer in that thing and do yourself a favor and listen to me on that. That is the chart. That is the professional chartist talking to you about brisket.
Not 200, 201.
Not 200, not 202. Because when you're going to pull it out and you're going to let it rest for about 45 minutes, it's going to rise to about 205, 207 in that time period. And that's where the best brisket is eaten, in my opinion. So be your own judge.
All right, everybody. There you go. You got it. So do it tomorrow. Smoke a brisket, guys. 201. That's where you want to pull it out at. All right. We will see you guys next week. And just because Tillman loves to hear it, is always remember the only thing you control is how much you lose. So
no, the only thing you can also actually control when you pull your brisket out. And it's 201. That's when you pull it out.
But you just said you lose some of it if you pull it out at a higher.
But you're controlling what you lose. You're absolutely controlling what you lose. In fact, this I'm glad we discussed this brisket because it completely destroys your ending of all your shows, and you can't say it anymore. It's dead.
Just said it. You said it controls how much you lose.
It does. So it blows up your theory. It is the anomaly.
Listen, I've got to go because I'm about to shit a brisket. Okay, so this needs to end. This thing needs to end. All right, let's cut this off. Okay.
All right. Thanks a lot for showing up, everybody. We're glad you're here, guys. I will see you all next week. Take care, everybody. Have a great week. Goodbye.
See y'all.
Trading tip. Always manage risk before chasing gains.